Thank you. Well, thank you all very much in advance for the opportunity to share with you our story. I'll be making some forward-looking statements, so I apologize for that. This is an overview of a video that you can download and take a quick look about around our assets. We're a multi-asset, multi-metal producer company, a multi-jurisdiction as well. We have producing mines in Bolivia and in Mexico. We have 3 producing mines in Bolivia, 1 in Mexico. In addition to that, we have 1 trading company in Bolivia, which complements nicely with our business model and the mines down there in Bolivia. I'll describe that in more detail. All combined, we produce close to 16 million ounces silver equivalent, where you have around 7 to 8 million ounces of pure silver. The rest is mainly zinc, with some copper as well, mainly from Mexico. Bolivia for us is a jurisdiction that it's very similar to Mexico, which are a lot of similarities, culturally speaking, and we identified a lot of untapped mineral wealth in Bolivia. That's why since 2020 we started looking around Bolivia. And in 2022, we have the opportunity to buy all the Bolivian assets from Glencore, including the trading company. And that was for us a transformational moment for Santacruz. We feel very comfortable at both jurisdictions. And as I was pointing out, in 2022, we acquired all the assets from Glencore. 2023 was a year where we focused on the transition process. We wanted to have a smooth transition process, and we confirmed that by producing the highest record production in Bolivia over the last 15 years. In 2024, we mimicked the same policies in Mexico, and we reached also record production in Mexico. We're trying to maintain our production as we keep moving forward. And during 2025, our main focus was to terminate or to finish with the Glencore payments. We had an acceleration clause which we put in place, and we finished our base purchase price payments with Glencore, actually in anticipation of the deadlines. So today we have no payments for Glencore, to do with Glencore. We own and control the assets now. And we have no other debts or liabilities. The company is free of debt. We have no streamings, no royalties. So we're building cash and a strong treasury month over month. This is our Q2 profile growth or production. As you can see on the right side, we have the production on a per mine basis. And the San Lucas Trading Company is, I'll describe that in a moment, but it complements nicely with our Bolivian assets. We have a lot of zinc, as you can see. Our pure silver production is close to 7-8 million ounces. Q4 for us is always the most important production-wise. So getting more in detail into our mines, this is the Bolivar mine. The Bolivar mine has been running for 200 years non-stop. It's impressive. As you can imagine, even in Mexico, the mines got a pause process during the war in 2010. But in Bolivia, nothing like this happened, so they keep running, and so far for 200 years. So we're comfortable, we'll keep inventorying resources here. Today we have around 4 years in reserves, but our conversion rate from resources to reserves, it's always more than 1 time. So if we consider that ratio, we have more than 12 years of mine life here in Bolivar. Porco is our smallest mine. Nonetheless, it's a very strategic mine for many reasons. This is a very narrow vein system. So when Glencore was running this mine, they were running it with a mechanized process, similar to the Bolivar mine, where you have very wide ore bodies, or wider than Porco. And when we came in, we tailor-made the mining process to make it more profitable. So we started mining this with jack legs, very artisanal, with cut and fill, and we make this mine profitable literally 6 months after taking over. Nowadays, of course, the mine and all of our assets are very profitable. Finally, from your producing mines in Bolivia, the Caballo Blanco group of mines, by all means, this is the youngest of all mines, with 20 years of production only, very profitable. This mine has very modern developments, very modern infrastructure, same as the mining infrastructure at Porco in Bolivia. As you can imagine, when Glencore was running these assets, they never hesitate bringing the best assets and best quality of infrastructure. This mine is, as I was pointing out, the most profitable of our assets in Bolivia, and we still have the mine and upside production, upside development, along strike and at deep. All of our mines have upside potential at deep and along strike. I kindly invite you to take a look at our 43101 reports where you can be able to confirm that. Then from our producing mines, we come back down to Mexico, the Zimapan mine. This mine is very different from our Bolivian mines in the sense of its geology. This is a very wide ore body. You have disseminated areas, you have stockworks, and at the same time you have a very competent rock. That makes it high volume mine. We have mining methods here like rooms and pillars, long hole blasting, when sometimes on a blast alone we can bring down 400 tons. We have very wide underground equipment, very large underground equipment. So this, even though you have less than 50% the head grades from our Bolivian assets, you have a very low cost on a mine basis. So this makes this a very profitable mine. The last year, last December, we arrived to level 960 at the Zimapan mine, where it's technically what we call the future of this mine. So we have been investing heavily in the property, and for the rest of the year, we're investing more into the milling facility just to improve the recoveries and align them to the mineralization of the Zimapan Carrizal mine in this case. Finally, those are your 4 producing mines, and the trading company in Bolivia, the San Lucas Trading Company. It's a very unique business model which complements nicely with our business strategy. The initial idea of San Lucas was to provide ore to your milling facilities and make sure that you have your milling facilities running at full capacity all year round. In case one of your mines have a hiccup, you can provide ore from San Lucas right away, and that guarantees a full production for the year. Actually, we have proof that the San Lucas Trading Company is more than that. It provides a lot of value to the communities that we work with. We provide them with technical and safety courses to make sure that these small miners improve their safety standards. We make sure they don't have child labor in their facilities, in addition to many other KYC processes that we make sure they run their assets. In addition to that, we bring them to the formal economy. They used to work on the informality, everything on cash. So we bring them to the banking system. We pay them through a bank, through a card that we open in the banking system for them. And at the same time, we retain taxes on their behalf. We pay those taxes to the government, and that gives, just to give you an idea, last year we paid north of $9 million on taxes on their behalf, on behalf of the small miners. This contributes not only to the small miners, but also to the local government, to the local economy. The miners have realized that being in the formality, it's better. They technically receive the same money because we can pay better margins, because we have and we own the most efficient milling facilities in the country, and we can give them better terms. So they are receiving the same monies, and in addition to paying taxes now. So some of them have already got loans to improve their mining equipment, and they have increased their production. So it's a win-win business model for them and for us. Just to give you an idea, last year we made around $12 million net profit of San Lucas, because this is a margin business. We always have a margin, and we protect that margin regardless of the metal prices. Finally, today, with the Glencore payments behind and having met those payments, we're building cash. We paid this year the $40 million on the acceleration clause to pay to Glencore. And even though today we have north of $50 million in the treasury, US dollars, we have a brownfield property, the Soracaya project in Bolivia, which was built and developed by Glencore. They built a PEA study where once it reached full production, it was called to produce around 4.5 million ounces of silver equivalent. So we're starting to put more attention into this Soracaya property, and we're going to start the full permitting of this very soon. Our idea is to get this property in production in a few years' time. I will be able to give more guidance and more accurate timing in a few weeks' time. But that's our growth, organic growth for the company. Going into our financials, this last quarter we report close to $70 million, a little bit more than $70 million in revenue, and EBITDA close to $27 million. Free cash flow for the year will be around $90 million, and again with no debt, no streamings, no royalties. That will allow us to keep building our treasury and at the same time to keep investing in our new property, the Soracaya mine. I would like to highlight the high all-in sustained cost in Zimapan, and that has to do with what I was referring before. I mean, we arrive at level 960, which is the most promising level at Zimapan. We have invested a lot of money. Just to give you an idea, last year we bought around 12 underground equipment for that area, scoop rams, jumbos, and different underground equipment. We have built an inclined shaft for ventilation, and in addition to that, we have already made some developments and prepared some stopes. So level 960 is already providing ore, around 4,000 tons last month. Our idea is to reach 40,000 tons a month from level 960, and at that time you will see head grades from Zimapan increasing slightly, and for that we're going to keep making some investments at the milling facility to make sure that recoveries are in line to what we expect. This is the evolution of our balance sheet in our resume. I mean, as you can see, we're building equity, we're building a very strong cash flows. Our P&L on a monthly basis is growing and very strong, more so with today's metal prices. And even though we're seeing very strong metal prices, we're keeping our disciplined approach to our production and our cost efficiency. So we're technically day by day looking areas and ways to make the most out of our mines. This is a little bit of history on the acquisition of the Glencore assets back in 2022. We finally made, last September, we anticipate the last $15 million payment. So this year, we paid Glencore those $40 million payment. With that, the base purchase price is behind. And even though we paid those $40 million, we have north of $50 million in our treasury. So we keep building a strong treasury, and that's why we are embarking into the building of this Soracaya asset. Our capitalization today, we're working towards making more awareness about the company. We feel that we need to have a better distribution on our shareholders with more institutional, more family offices. So that's what we're working nowadays. This cash on hand is as of the second quarter, so as I was pointing out, we're building more and more cash. So today we're north of $50 million, 550. We definitely believe in doing the right thing, in working together with our communities. We cannot come to these poor areas where most of the mines are, invest millions and millions of dollars and not see a benefit in your nearby communities. So we invest a lot in schools, especially the children. We feel they are very important. So Those are areas where we invest heavily, and we stick to the United Nations Sustainable Development Program. So that's a reference for our investors that they can see in